Hello traders, Mike Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is a gloomy Tuesday morning here in the UK, 22nd of August. The market's at Deadsville. Just a thought going forward. If you do get an opportunity to, get a break during the 6 weeks holidays as a trader, it's usually worth seriously considering because the market's just dead. We've been around because we've got other work to do and developing all these concepts and ideas to share with you guys. But I'm going away on Thursday of this week, so if you do get a chance to get some sun, it's worthwhile, or just a break, because the markets are they're going nowhere fast. Again, no news again today, so very, very quiet, very little in the way of catalysts to light a fire under anything. And also what's very typical with this type of environment is volatility. All that dries up and the moves don't follow through. You look at a trade setup and it looks absolutely epic, a real nice trade strategy, a real nice trade setup rather, and you take it and within 2 seconds you're underwater, and it just doesn't follow through. So it's an infuriating type of market. It's a very easy type of market to lose money in. So you're oftentimes better off just sitting on the sidelines. So during this type of market, there's nothing super obvious. I just prefer to leave it alone. Knowing when not to trade is just as much of a skill as knowing when to trade. And the summer doldrums are definitely here. But I just wanted to discuss this chart. It's kind of interesting. Just along the lines, if you've been following us recently, you'll know we've talked a considerable amount about stop hunts and market manipulations and things of that nature. And how do traps sort of fit into that? Well, the traps are the singular and structural events which actually catch the traders. It's all part of the manipulation. So the manipulation is, I would consider it as like the broad strategy, like the foundation of everything, but the traps make up that full picture, because obviously a manipulation isn't just one trap or one structure, it's usually several, and that's how you understand. By understanding the traps, you understand the manipulations, and they kind of go hand in hand. So what we have is contextually it's important. We'll focus in this area for now, but actually we'll just highlight this area. I'll get rid of it in a sec. Contextually, when you're thinking about stop hunting a trend, if there's a market that's going to continue, right, and if big institutions are piling money into a market that is ultimately trending, it's never perfect. You're never going to get a situation where you can just place your stops happy below each structure, and you're never going to get into trouble. Wouldn't life be wonderful if that was the case? The reality is far different from that. And what tends to happen is you'll get some type of advance that looks fairly normal, and then you'll get something that looks like that, right? And if you were placing your stops under any of these structures, obviously you get creamed, the market continues. You were right, but unfortunately in terms of directionality, but you're not on board the trade anymore. And that applies to all these happy, unhappy, we're happy campers at one point, now they're unhappy campers, who place stops below this structure. And importantly, why I highlighted this yellow area, it's look at the price action, look how vertical it is, look how eye-catching it is, look how big the candles are, right? That's the type of price action that gets any type of trader a little bit hot under the collar, right? If they're not in that trade, what do you think they're thinking about? If they weren't able to get in it, what do you think they're thinking about over here? They're thinking about how the hell do I get in it, right? And what happens is when you start to get some structure develop, these are the perfect locations for those traders to pull the trigger and join the party, as they would say it. And from there, obviously, it becomes very obvious where those traders will place their stops. They'll place them under that structure because it's an oasis in a bit of a desolate land, because one of the things about these big moves, the big volatile impulsive moves like that, is it creates a conundrum for traders who are trying to get in at that sort of that top end of, or the bottom end of the trade in a down move. And that is, they don't want to place the stops below where these big moves originate. Although there are some minor structures in here that you could argue they could go to, it's still a lot further away than this area in here. And that's what the problem is. Usually you don't even get that. Sometimes it's just like straight north or straight south, and that they're going to have to go from below from where the move originated. And that's the conundrum, that because they're so tempted by this move. But the problem is they don't give it all that stop. Or some people do, they get forced out of the process and they get a really shitty reward to risk ratio as a consequence of that, right? They're just so desperate to take the trade. Most people get dragged in, and what they'll do is they'll hide behind any developing structure. And that's, the traders are there because the price is bouncing off the level. People are trading it. The problem is, obviously, there was a manipulation, and let me just delete all of this and highlight where the stops were again, everywhere below there basically, and they got creamed in here. Right, so just put yourself in the shoes of the traders who went long in here buying, right? The place the stops under there, they got stopped out there, and now prices in here, right? How's life working out for them? What's their psychology? They are super, super annoyed, right? Because they're like, oh man, I got the direction right, but unfortunately for them, they got stop punted, and it's because their moves are very obvious. And as I say, and even if this thing is going north, unfortunately for them, they're not on board because they were very, very focused in the price action in here, and they didn't really consider that their moves were going to be very clear for others to see where they would place their stops, etc. And if something big wants to do some buying, then it requires a lot of selling to occur. And what happens is, if you buy in here thinking it's going to go long, your stop loss equals sell contracts, right? So if something big needs to do a lot of buying, it needs a lot of selling. That's what I refer to as forced selling. It's not willing selling. If you're in here and you go long hoping it's going to follow through and you get stopped out, right, it's not something you wanted to happen. If you're in this trade and your stop maybe was a little further away, but you saw the intensity of this drop, you bailed on it because you were emotional, impulsive, and you bailed on it because you thought the level had gone because of the intensity of the drop. Very, very typical that the market will move quickly as well through stop orders, because it's like pop, 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 all those orders are getting fired. The market moves quick. Simultaneously, something big buys in the face of that selling. But if you were just looking at it in isolation, going, "Oh, damn, has this level popped?" In here, I'm talking about. It certainly seems that way, and it'll force you to exit. And then you're really annoyed because you were still in the trade. Your stop was further away potentially, but the market movement itself shook you out the trade, right? It shakes the weak hands out. So they got creamed too. Now they exited manually, but it's still selling, and it was because of the market, the way that the market presented itself as to why those people bailed. I'm sure you know this to be true, right? If you spend any time trading, it's a very, very common novice mistake that when the market's moving quickly against you, and even if you've got a stop in, sometimes you'll go, "Oh, you know what, just screw this, I'm just going to bail because it's clearly over." And then 5 minutes later, it's completely the opposite, but you're not in the trade anymore. But that movement made you exit. So it's forced selling. However you dice it, it's forced selling. It's forced selling through the automatic stop being fired, because you've got your orders sitting there, and it's forced if you get shaken out of it psychologically. So this is kind of interesting, but you do have this level up there, so what you'd want to actually see is it break up above that level, and then you'll be fairly confident that that was indeed what you thought it was. But yeah, it's more about, as I say, the markets are so quiet. It's just it's better just to do a little bit of training, help you understand my concepts in a bit more detail, so that you can start seeing this stuff for yourself. But if you want to come in and join me in my brand new inner circle to learn how we do this in a bit more detail, then click on that link below. If you like the content, hit the like button. If you want to share it with your buddies, hit the share button, and I'll see you on the inside. Take care.